Hello and welcome back. The next video in this guide to selling your business to your employees is looking at the alternatives. You're obviously looking at employee ownership, but how does that compare to the other exit options? And the main exit options that are out there are selling your company to private equity, or the other option is to be able to sell in a trade sale. So effectively selling to a competitor or an aligned company. And then lastly, we're going to be comparing that against selling to your employees. So we're going to look at that through a couple of different lenses about mainly about what does an owner care about. And the first item off the list is about getting a fair market value for your exit. This is all about ensuring that you get rewarded for all that effort that you've put in to your business over the years. And all these options do provide you with fair market value. Now I will say that private equity and trade sale do have the opportunity to be able to spend potentially a little bit above fair market value as they leverage this as part of their overall investment portfolio and their change management strategies within other structures. But that does not mean that it's going to be the right fit for you. It's all about, are you getting a fair market rate? And that answer is yes, across all those elements. This is when it starts getting a little bit interesting, is your legacy preserved? When most people sell to private equity, it's typically just part of a stepping stone for that firm and part of their investment cycle. Because what they're looking to be able to do is to deploy a certain amount of capital and deliver a return for their investors. So the main ways in which they do that is that they buy a company and then look to be able to optimize that business by looking for efficiency gains, looking for financial engineering, looking for bolt-on acquisitions so they can rapidly grow that company. Your business may be one of those bolt-on acquisitions. And so that means that your legacy is not going to be preserved. They're not going to be the ones looking after your brand, preserving your client relationships, preserving your supplier relationships. And that's exactly the same as what's going to be happening for a trade sale. Selling to your employees is very, very different. Those existing relationships are going to stay in place because that is the focus. That is a key focus. The employees aren't going to change what's broken. Then here we're talking about job security. So the job security is really, really, really important for a lot of founders who are looking to sell their business. They want to ensure that their staff are going to be secure in the future. And that is something that can't be guaranteed in those other models, but can be guaranteed in employee-owned models. We see that some of that data that I referred to in the earlier video has sort of stated that employee-owned businesses are more resilient in downturns, so that when there is a problem, and there are going to be problems ahead, that they are able to continue to thrive. And so that's definitely something that we're going to see. Looking at the next option, okay, is there a simple and transparent deal structure? Look, this is something that we pride ourselves on a Better Monday to be able to give you the flexibility and then create something that's really, really simple. That's something that private equity and trade sales can't guarantee. A lot of them have really long, complicated earnouts. Private equity, for example, may be asking you to reinvest quite a considerable amount back into the new entity. So these are things that are prevalent and on the minds of owners. Another one is cultural alignment. Yet again, these private equity buyers and trade sales, they're going to be looking to implement their own culture to be able to drive the performance improvements that they need to deliver returns. When you're looking to transition a business to your employees, you're looking to leverage and amplify the existing culture that's already there within the business, because culture comes from the people, and the people is who are going to be the owners of this business moving forward. Community impact. We're going back to the data I shared in that first video. Selling to private equity and the trade sale is going to mean that they're going to look to be able to optimize. They're going to be looking whether that is across their global supply chains, whether that's going to be relocating businesses into different areas. These are things that they need to be able to do to deliver returns and justify this for their investors. And they may talk a big game coming out, hey, look, we're not going to change anything. They are the investors. They are the owners moving forward. And they, a lot of the times, are going to be absentee owners. They're not going to be living in the local community. Your employees are living in the local community. They're going to be staying in the local community. And when you're walking down the street post this acquisition and you do bump into some of your employees and you've just received this check from them, whether it's a trade sale or a private equity, and you've been told that they're restructuring your company and that your employees are now no longer going to have a job, how are you going to feel? We hear from owners a lot that this is one of their biggest fears, and that's why they really love the idea of exploring a sale to employee ownership, because it totally transitions that conversation when you're walking bump into those people in the street in your community. Financial stability. Within a private equity sale, a lot of the times these firms are going to use a lot of leverage. They use the leverage to be able to maximize their returns. And then sometimes, once they've made that initial transactions, they'll use the leverage again to be able to go and ensure that they can get that cash out and deliver immediate returns. So yeah, that's a real risk in the private equity. Not so much in the trade sale, but it's also not prevalent within employee ownership. We look to be able to build the models that can provide the resilience for the business to ensure that that's not going to be at risk being sort of stuck with an overly burdensome debt schedule. And then lastly, we're going to be talking about quick and simple due diligence. Our focus is at A Better Monday is really about leveraging the great assets within the business, the employees, to be able to move forward. Now, engaging them both pre and post-transaction is something that we'd like to do, but if we are only engaging them post-transaction, we also know that they have been your partners in the business and helped you to grow to where it is today. And so that helps us to really create a streamlined due diligence process. Okay, that was us talking about the differences. Then our next video, what we're actually going to be talking about is what is the journey like selling to employees with A Better Monday, i.e. what is the process and what are the steps that we're going to follow. Okay, we'll see you over there in that video. Bye.